Hello, this is Jordan. This video is being recorded on the afternoon of Sunday, April 9th, 2023. Thank you so much for joining me. I want to wish a happy Easter to everyone out there. And in this video update, I will be looking at the outlook for gold and silver and the miners this week. So let's get into it. So looking at gold and silver, we have the weekly candle charts here, gold at the top, silver at the bottom. And so prior to this past week, the 2 weeks before that, the 1950 to 1985 resistance zone for gold was slowing gold down. You can see those two doji candlesticks. So gold had slowed down in that area. If you look at the daily chart or the weekly chart, you don't see any negative reversal, but you did see it slow it down. And so last week, gold gained 2%, was able to push above that. It closed the week actually at the second highest weekly close ever. So the highest weekly close ever, I think, is 2027 or 2028. So it was really close to that all-time weekly high. But nevertheless, with that move in gold, now you have good support in the, call it 1950 to 1985 range. That's now support in the very short term. So even if gold is down this week, or if it were to soften or kind of consolidate or not do nothing for a week or two, it's still in good shape, I think, in the short term to push higher and make that new all-time high. Look at daily resistance at 2050. So 2050, if we get a daily close above that, that could trigger the next leg higher for gold, and of course everything else would follow. Silver has been outperforming gold in recent weeks, so that's a good sign. You look at the last 4 weeks, those are 4 bullish candles. That's 4 weeks in a row where silver has closed at or around the high of the week, so that's very positive action. So silver should be able to continue this up to the first zone of resistance right around 26. And so if silver can make a weekly close above, let's call it 26.50 or 26.40 in that area, then we would be looking at $28 for the next target. So, I mean, if we presume gold is going to make that daily close above 2050, and in addition to that 1950 and 1985 is going to hold over the days and weeks ahead, we'd expect gold to close above 2050. Then that also has bullish implications for silver, which has been outperforming gold. So initially you have some resistance around 26, but good shot on this move. We could see silver reach 28 before there's some kind of a pullback. As far as gold, I'll have to look at the hourly chart again. I don't know there's a potential bullish ascending triangle pattern there, a potential small cup and handle, but I don't have a target in the very short term with respect to, if it's 2100 or 2200. I haven't thought that out yet. Now, another thing I want to mention is the sentiment on gold and silver. Now, gold, looking at the COTs, the net spec position, so I measure it as a percentage of open interest, so you get a consistent reading over time. And we have gold at the top, then the gold COT, the net spec position, is right there in the second position. Then the next big chart is silver, and at the very bottom, that's the net spec position in silver. Now, I've said this before, but the net spec position in gold, when the gold market is making these major breakouts, and, there's been, 4 or 5 of them in the last 20 years or so, the net spec position is fairly high going into the breakout, which, you would think the breakout has to happen with sentiment, or at least that, there being less speculation in the market. So that's something to keep in mind. Like, when the market heats up, you can see speculation really increase quickly. Like, look what happened in 2019, in this after April, May. You can see how quickly the net spec position in just a couple months time, went from like around 10% up to, I think, about 50% in, what was that, 3 months or so. But, where we are here and now, a net spec position of 46% of open interest. I mean, not super high. I mean, the peaks, if you're looking, you're going back based on this chart and even longer, 20 years or so. I mean, the peaks tend to be 55 to 60%. But again, if you're looking at the peak, there was a peak in the summer of 2019, and look, gold kept moving up. So that goes to what I said before, that the net spec position reaching a high level is, it depends on the context of, all these other things. It's not necessarily bearish. You'll see people on Twitter come out with all the charts. Oh, the COT, bearish gold, as gold's breaking out. But that's what happens during breakouts. So you can ignore that or not paying attention to it. Now, the silver, the net spec position remains pretty low, only at 24%. Now, silver doesn't, the net spec position doesn't perfectly act as you would expect. In other words, the market goes up, net spec position goes up, market goes down, et cetera, et cetera. It's not quite as correlated to the silver price relative to what you see in gold and other commodities. But with that being said, I'd rather the market be here where it is now with a net spec position of only 24% versus a net spec position of 45% or 50%. So, but just the point of this, after all that babbling, is there's not that much bullish sentiment in the gold and silver market. Now, I do think maybe in the next couple weeks that'll change and you'll get people coming in and suddenly people are really, really bullish, and then a little while after that, maybe you start to get a real pullback. But, here in the short term, over the next week or two, or maybe for the rest of this month, there's still room for this market to move higher and higher than people think. And it's just, it's important to keep this in mind is, when a new bull market starts and a market gets really overbought or sentiment gets bullish, especially the overbought part, that's actually more of a bullish signal, because that tells you a lot of new people are coming into the market. And that's what you want. Getting overbought, showing really strong momentum, coming out of a downturn, that is a good thing. So, things getting overbought initially, that's not a reason to be bearish in the short term. And, I didn't show it here, but I'll do another video this week. GDX, the advanced decline line, we're triggering bread thrusts. All those bread thrusts that I talk about, they are getting triggered. And the last two times that happened, GDX kept running. It kept running higher in the short term. So this is not a time where you really want to be short-term bearish. And so looking at GDX, GDXJ, and SILJ, yes, there has been a very strong move since the bottom in March. It surprised me, but look, that's what bull markets do. They surprise you. And if we're just going back, look at how the market performed. We had a sharp correction in February. And even before that, you go just look at 2022 and the huge declines that occurred from April down to October. The same thing happened in gold. These people are talking about, I'm waiting. There's going to be this huge pullback in gold. It's like, bro, that happened last year. Gold corrected 20%. That already happened. Gold and gold stocks were correcting for 2.5 years. It already happened. So this worry that there's going to be some massive pullback, some 2008 style crash, it's not going to happen. Now look at what happened during the 01 and 02 bear market in the S&P. Look at what happened. I covered this in my premium update. That's something that's how precious metals might get hit or consolidate for a while. So I'm sorry to get off track, but to get back to the here and now. So looking at miners, I think this move can continue up to the red lines before any serious pullback. So looking at GDX, 38, 39, 40. That's significant resistance there. What is that? 4, 5. So on 12, 13, 14%, something like that. That's not that much for gold stocks. It's really not that much. GDXJ. So it's, it's kind of breaking resistance. 41. So where's, 47, 48, that area, that is going to be stiff resistance. And for SILJ, they're at the bottom, close around 11.5, looking in the mid to upper 13s and 14s. That's where the significant resistance is. So when you think something's really overbought, or you worried you need to take profits, you worried some big correction is coming, look and see, and you could do this with monthly charts also. Look and see where the strong resistance levels are. So that's what I've done here with the red lines. These are the strong resistance levels. If we run up to these in the next 2, 3, 4 weeks, then the market hits sell in May and go away. That's the point where you could see a correction in the sector. Not a huge crash, but a correction in the sector, a correction in a new bull market. So with that said, let me know what you think in the comments. I'll definitely have some more videos coming this week, looking to produce a lot more content for you guys. Check out my premium service at thedailygold.com/premium. I think this is the next couple of years could be the most exciting for precious metals in the last 50 years. It's a really, really exciting time. You don't want to miss out on this opportunity. Thank you so much for tuning in. Hope you had a great weekend. I'll talk to you guys next week.